this is going to be a routine check. We'll be doing a market check later also. But then let's talk about new listings. A week debut for Capillary Tech, almost 3% on discount. But then let's talk more about the company and the listing today. We are joined by Aneesh, Reddy, Boddu, MD and CEO, and Anant, Choubey, CFO and CEO of Capillary Technologies. Hi, morning, and welcome to the show. And Aneesh, I'll come to you first. Any plans to reduce customer concentration, given that the top 5 customer accounts for almost 43% of your revenue? How would you go about it?
Two parts to that. Our top customers are Fortune 500 companies, and today, as you said, they contribute about 43% of our revenues. Now, what we're doing there is we're winning more larger customers every year. So if you look at our DRHP, when we filed the DRHP, we had 16 Fortune 500 customers. Today, we have 19 Fortune 500 customers in a matter of a couple of quarters. So we're roughly adding about a similar pace of about a Fortune 500 customer every quarter. And with that, what happens is the base of revenue grows. Although our top 5 are continued with us, our net retention rate is between 115 and 120%, so existing customers are growing. As the base of revenue grows, their contribution comes down. So if you look at our H1 of this year versus our H1 of last year, there's a 2% reduction in contribution of revenues from top 5 customers, although the overall revenue base and each of these customers' revenue is also grown. Right? So it's basically as we win more customers, that concentration will keep coming down. And if you look at the last few quarters, there's enough large customers we've won every quarter now.
All right. But Anant, let me come to you. On the object of this issue, help us with some more understanding here. How will these investments impact your gross margin specifically and your unit economics over the next 2 to 3 years? Give us some more understanding on this matrix.
Right. So if you look at, we are looking to use the funds that we are raising for the purpose of R&D and more product development. We've been investing heavily on tech, and that's been our moat or the reason why we win in the market. If you now look at our P&L, the COGS is what is linked to the revenue, which is about 30% of the revenue. But on the rest, you would see the leverage playing out. So over the last few years, our as a percentage of revenue for our either sales and marketing cost or our tech cost or G&A, as a percentage of revenue has come down, while on absolute numbers they have grown. So we expect that the leverage that we have seen in the business in the form of about 3-4% EBITDA improvement every year, that I think is a healthy trend, and that's the beauty of a SaaS business that we have seen over the last few quarters.
All right, Aneesh, I'll come to you now. Given that timely and cost-efficient new product development is a key dependency for the business, how are you strengthening your product development cycle in terms of timelines, feature rollout, cadence, and investment priorities to ensure faster innovation and sustained competitiveness?
We've been building products for many years now, and there's a fairly well-established process for figuring what to build, how to build, quality, and all that in the org. If you look at our product today, it's rated amongst the highest by any analyst in the loyalty space globally. Right? So we've been doing some good investments on what's changing in technology. AI, for example, has had a big shift, so a bunch of investments there. We're going deeper on verticals that we don't work with today, and also going deeper on verticals where we have existing customers. And I think that's the way forward. So we'll continue to do what we've been doing, and that's worked for us and will hopefully continue to work.
All right, but Anant, if I may ask, what are your key growth areas going ahead, and can you specify what markets geographically you are targeting over the next 2 to 3 years?
So if you look at a large part of our growth comes in from existing customers. Our NRRs are in the range of 115 to 120, which means our existing customer continues to grow and that's been a very healthy trend over the last many years. The other growth comes in from winning new logos, and there has been a lot of focus on winning Fortune 2000 customers. If you look at our past data, we now work with about 19 of Fortune 500 customers. As Aneesh mentioned, this number has grown from 16 to 19 in just the last 2 quarters. So that continues to bring in healthy growth organically. At the same time, we have also done a couple of M&As over the last 4 years, and those M&As have been a lot of value accretive for the company. Each of those M&As have been 20% plus ROC buys, and that's another strategic area for growth.
All right. Aneesh, last question to you now. With your IPO listed today, can you tell us about your medium to long-term vision and growth guidance going ahead?
So in terms of the company, we want to build the best loyalty product company globally. That's always been the mission at Capillary, and it will continue to be even post the IPO. I think the IPO means that our financials are more stronger, are more transparent, and that hopefully reduces risk for our very large customers or very large prospects to work with us and helps in this cause. In terms of guidance and profitability guidance, I don't see a reason why we should not be able to do what we have done over the last year and a half or so in terms of both growth and profitability improvement. I think we'll continue on the same path.
All right, Aneesh as well as Anant, with this we let you guys go. Thank you so much for taking the time out, and once again congratulations on the listing. The stock for now is also doing very well, up by almost 7.5%. But with this, viewers, it's now time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. As we come right back, we will be taking all your stock related queries, so stay tuned and start writing to us.